our views on SpaceX and our thoughts about merging SpaceX with Tesla or selling Tesla to buy SpaceX. I think fundamentally the way we think about SpaceX as a company is that it's a company that will provide access to space at a scale unprecedented. So it's kind of similar to the railroads that got us access to the west of the United States, or when ships uh, enabled humanity to travel and then got access to the Americas and Asia at a much bigger scale. Of course, let's say in the shipping industry, let's say in the Renaissance or even before, I mean, the Chinese and Phoenician and whatnot traders, they were always traveling, but it wasn't possible to travel for weeks on the open ocean before innovations such as sailing against the wind and other innovations, preserving food and things like that were enabled. So in that sense, we see SpaceX as a access to space company. Now, what you do with space, actually, honestly, who knows? Whether it's going to be space AI or something else doesn't really matter. I think looking at human ingenuity, looking at what humans typically do when they have when the cost of accessing something gets lowered dramatically, and when there is a lot of energy and space available, typically humans figure out things to do. So I think I'm not concerned about that. And therefore, I think overall, the SpaceX IPO is not wrong. Like, for example, an IPO, a few examples that I think were just plain wrong. One was Uber or Airbnb or Coinbase. Recently, maybe, yeah, those were wrong IPOs. There's probably what's the company? Snowflake. Like all these companies, in my opinion, were wrong IPOs because they don't have the unit economics to maintain multi-$100 billion type companies. So having said that, the purpose of this episode is really to focus on the question, should we sell Tesla and buy SpaceX? That's the fundamental question we have here at Orange Capital Partners. For listeners that are not in this position, you can look at this as just our thoughts on SpaceX, our thoughts on Tesla. This is not investment advice. Please don't act based on this and don't solicit us or anything like that. The purpose of this podcast is to give people a sense of what it feels like to run a hedge fund, where we have a large investment in Tesla. There's an IPO right now with a company that is related to Tesla. It's a cousin, and therefore, the question, of course, comes up: should we get involved? And the answer is we're not getting involved. And we want to give some reasons of why that's happening right now. This is not even wrong podcast. It's June 14, 2026. This is Karim Delco. For the year, we're down 5.7%. The market's up 9%. Round performing by 14.7%. So I think let's start with why we're not selling Tesla and buying SpaceX, because that's the first question we have to answer. Now, there's a couple of things when you run a fund that you have to be conscious about. One is how much capital do you have at your disposal, and for us, we do have some availability of capital. We're not fully invested, so that there's a potential for us to buy SpaceX without selling Tesla. However, that would involve increasing our leverage, or in other words, borrowing money to do that. We can borrow. We have access to funds to borrow, but that's not what we want to do. Now, the other option would be we have to sell some stocks that we have. And we have two large investments. One is NVIDIA and one is Tesla. We could sell some NVIDIA, but our NVIDIA position is relatively small. And if we sold NVIDIA to buy SpaceX, then we would basically put even more of our money into the hands of the Muskonomy. And that's one reason why we're reluctant to do this. But more importantly, also, I think when you face these types of situations as an investor, I suggest you really look very hard at just, okay, what do I own and why am I selling it and what am I going to replace it with? What is my opportunity cost for those who are economically a bit more, wired. So if I do X, the counterfactual implies that something else happens, right? And that's what concept of opportunity cost is. So it's never like any action you do in the investment world has always this question attached to it. And even if you do nothing, you hold cash, then that is what your money is in, right? So you have to think, okay, is holding cash better than holding a stock, or holding Tesla better than SpaceX or gold or whatever else, maybe another stuff. And having said that, now what we think here is that we don't want to sell Tesla, because if you look at the fundamentals in the coming 2 quarters, it's actually almost the inverse, where all the hype is in SpaceX while the fundamentals are very weak and they will take a long time to materialize. Versus on the Tesla side, the stock has been sold off, has been flat for 5 years and sold off recently, and the fundamentals are actually improving dramatically. So you have this inverse situation where the hype is very low with Tesla and the potential very high, versus at SpaceX, the hype is very high and the potential very low, very short term. Long term, it's a whole different story. But I think it would be not wise for us now to part with our Tesla shares to buy SpaceX shares, just to then eventually own, just to own SpaceX, because we think that if if that happens, if we did that, we would want to do that at least at a one-to-one basis. In other words, if Tesla and SpaceX had the same market cap, then maybe we would consider that. And there's another really strong reason why we shouldn't be doing this right now, and that is that eventually there will be a merger sooner or later, and then that merger will happen most likely at least at the 50-50 level. And then we also have some technical trading tax implications that are on our side if we don't sell, if we just wait for the merger. So having said that, now let me talk a little bit about the actual prospects here, because that's what our job is, right? It's to analyze the situation and to maybe isolate a few of the big triggers that can drive the stock up. And let's start with Tesla. That's the stock we own. The triggers that will drive the stock up is a trigger, actually, or the triggers. There's two, which are both related to self-driving. One is cybercab, and the other is full self-driving. They're both very important. Cybercab is transport as a service provided by autonomously driven taxis, eventually also trucks, and then full self-driving is the service of having a fully unsupervised self-driving technology in your personal car. Both of these are world-changing, once-in-a-generation type technological developments that really have fundamental impact on lives, whether it's less accidents, older people can drive around a lot more, younger people, teenagers, you can go to a party with your car and then just drive back, have it drive back. You don't have issues with parking. There's a lot less accidents. I don't want to go into the details now why that is in principle, or from first principles that is the case. So we're not predicting a future here that is hypothetical. I think having autonomous driving is many times safer. And we have tested it ourselves for the last 2 years. We've been testing it for the last 2 years. And that is the conclusion that we come up with actually a technology that is not even as good as the technology that is available right now, because we're on hardware 3 and we don't have the latest technology, but it's good enough to make that statement. And of course, also we expect much better technology. So the main driver is that we could see a fundamental, substantial monetary change in the financials of Tesla, driven by full self-driving in the tens of billions of dollars. And if that happens, the stock will reprice. So that is a very near-term situation. Versus on the SpaceX side, it's the exact opposite. The actual fundamental business right now, it's solid. Starlink is a solid business, but it's not nearly enough to justify the valuation. What you need here is space AI, and space AI will take some time. And most importantly, and actually I haven't heard anybody talk about this at scale, What you need for space AI is actually Starship. Now, you can have Falcon 9, but Starship will bring down the cost to a level where space AI actually has unit costs that are competitive at scale with terrestrial AI. Now, terrestrial AI has its problems. The NIMBY issue is getting bigger and bigger, but there are ways to deal with that. There's stranded assets all over the world. You can go to Iceland, you can go to New Zealand, you can tap areas that don't have the NIMBY problem. The same way, actually, we're tapping space because it doesn't have the NIMBY problem. So there are opportunities like that also on Earth. It's not just that space is the only non-NIMBY available space in the universe. But in order to get the kind of scale and the terafab and all of these things, you need Starship, and there's substantial technology risk with Starship. The same way there was technology risk with FSD. Now, am I predicting that Starship will not happen? Absolutely not. Am I assuming Starship will be delayed? Absolutely yes. It's almost certain that Starship will be delayed. It's just an engineering feat that is so immense and so new and so unprecedented that it would be a miracle if this thing just happens linearly, nicely, for the spreadsheets of Wall Street to fill in, and then the stock linearly goes up and things like that. That's not going to happen. There are going to be delays. The same way, I mean, you have FSD all over again. Basically, SpaceX is now Tesla 2.0. In other words, there is a huge potential market to be tapped, but that has to be first developed, and Starship is the vehicle to do that, because in order to deliver a terafab worth of AI into space, you need a vehicle that can lower the cost per kilogram to space at least whatever 100x or whatever it is that Starship does that. And that's another reason Starship is crucial, is that it's also in a hypothetical world where you have Falcon 9 carrying all the load. In that case, there is competition coming, and then the question, of course, if you can do it with this type of technology, then the question of competitiveness comes up. But I don't even want to go there, because it's just not enough. In order to make space AI possible, Starship needs to work, and Starship is a project in development. Now, I want to clarify one thing. Maybe we here at Launch Capital Partners, our mission is to invest in fundamentally new concepts and engineering practices with large impact. So we're certainly not against projects like Starship or Space AI or Terafab or solving the NIMBY problem of AI. Those are amazing things, because the way we think about the future is we always look at the future as, okay, what is for sure not going to change? In other words, we can't predict the future, but how about we predict what's not going to change? Lower cost access to energy, more comfort, more safety, more convenience for people, lower cost energy, like I said. Those things will always be demanded. And we add to that also intelligence. Intelligence has infinite demand. For those who want to dig a little bit deeper, go to our website, search on the podcast side for Karl Popper, for epistemology, David Deutsch. Those keywords will get you to episodes, papers, presentations that we gave, presentations that we refer to, that talk about that. And the idea is very simple. It's Popperian. Karl Popper is a philosopher from the first half of the 20th century who coined these ideas that the way science works and the way knowledge is created, it's an ongoing project, and new knowledge begets new knowledge. So the more knowledge you have, the more problems you have, the more problems you can solve, the more intelligence you require. And the reason all this is a flywheel, or actually an avalanche is a better analogy, is because every time you do an iteration like that, the reward function is, am I getting something at lower cost? Am I getting more comfort? Am I getting more safety? Am I getting more value, or all of the above? So if not, then science becomes somewhat less interesting. But with this type of avalanche continuing to go, and we solve problems in physics, we solve problems in AI, we solve problems in computation, we solve problems in material science. wherever it may be, it will always serve this purpose of getting lower cost energy or lower cost access to transport, lower cost access to housing, lower cost access to drug development, because that's really what drives economic value. So now back to our initial conversation. So we do think that there is a lot of potential for SpaceX, and we would be happy to merge with SpaceX at a one-to-one, which we think will happen probably in the next 12 to 18 months, but it will happen at a level where Tesla is at least 600, if not higher, and SpaceX is maybe 250, something like that. So you can see already there that there's a lot more upside. We believe that there is 50 to 100% upside on Tesla versus maybe 20 to 50% upside on SpaceX. And then there's other technical reasons why we think that there's also the timing thing. I mean, if you have 50% in a year versus 50% in 3 years, that's a whole different return because we of course look at CAGR, so the annual growth rate of our portfolio over time, and the faster it grows, the higher that annual growth rate is. So having said that now, I think to conclude, we are not going to buy SpaceX shares by selling Tesla. We are also not buying SpaceX shares with our available capital because we would have to borrow money. This leaves the last question maybe just as a sort of addition. It's not relevant for the fund right now, but would we buy SpaceX just out of pocket if we had cash? The answer is no, actually, because if you want to invest in, I would say the best investment right now, short term, if you really want to play the market, is just play what's scarce right now, scarce being chips, memory chips, CPUs, energy, connectors, data center infrastructure. Those things are relatively in demand right now, so you can probably have another run at it. The problem with these types of investments is that they will work until they don't, because there is a lot of innovation happening, particularly at companies like NVIDIA, but others that are trying to solve the bottleneck that is driving up these stocks, whether it's SanDisk or Micron or Intel or ARM. Maybe ARM's a bit special here, but in general, that space, AMD, and then companies like on the infrastructure side, GE Vernova, Uranium, whatnot, all the whole supply chain, or the cake, as Jensen called it, the 5-layer cake with energy, chips, cloud providers, model providers, and then the application providers of AI. So the AI cake, the whole stack here is being repriced right now. But we believe that in the sort of midterm, let's say that is our thesis. A lot of these bottlenecks that are driving up stocks like CPU stocks, chip stocks, memory stocks, etc., that they will actually be halted this rally because of innovation that is happening at companies like NVIDIA in particular, that is trying to solve that bottleneck with better technology and get access to compute and energy at lower cost. So to summarize, we are not changing our investment strategy with the SpaceX IPO. The reason is that we believe that eventually we will merge with SpaceX at least a one-to-one basis, and therefore there's a lot more upside for Tesla in the immediate time frame relative to SpaceX. Thank you.